Let's take a look at the markets. We're still holding about 6,000 in the session, and that's about a 0.25% gain coming in for the benchmark. You're looking at Dr. Reddy's Laboratories really picking it up in trade. Care in India has done well for itself. Some of the infrastructure and cyclical names in Ambuja Cement has also been able to fairly score in terms of price and volume activity. Tata Steel, Bharti Airtel, Reliance Infra, Bajaj Auto, TCS, these are all the other stocks which have gained in the session. On the losing side then, you have the likes of a Tata Power, a Lupin, a Jindal Steel and Power, a Punjab National Bank, which have given way. So it's really divided right down the middle. In terms of stock-specific activity, banks seem to be stepping back a bit.
Right, let's also take a very quick look at how the currency markets and the fixed income markets have been faring. The rupee, after closing at levels of 54.35 to the US dollar yesterday, is under a mild amount of pressure, but those gains in large part holding up. 54.40 against the US dollar is where we're seeing it at. Now, it is quite unlikely that you will, like we've been saying, see the rupee break above 54. This is quite likely the range that you're going to see the rupee trading between 54 to 55 is where it's likely to stay for some time at least before you have any radical flows or any other factors that can actually influence the exchange rate. But in the fixed income markets, yesterday we did see the yield on the 10-year benchmark bond end below 8%. It did end at 7.99%. And there is this big expectation that's already been priced into the bonds that you will, in all likelihood, see a rate cut from the Reserve Bank of India on the 29th of January. So both on the bond price front, where bond prices have actually risen quite significantly in the last couple of weeks, and on the rupee front, things looking good as we speak.